Welcome to Furniture Industry News for November 27th, 2024. Today, we're bringing you the latest updates from across the furniture industry. We'll be diving into some interesting developments, including new consumer confidence numbers that show some promising trends, a significant shift in the housing market, major potential changes to trade policies that could affect our industry, and some notable corporate developments at Sleep Number. Let's get straight into today's stories. Consumer confidence showed strong improvement this November, with the Consumer Confidence Index reaching 111.7, up 2.1 points from October. This increase was primarily driven by more positive views of current business conditions and the labor market situation. Notably, consumers' expectations about job availability reached their highest level in almost 3 years. The Present Situation Index, which measures current market conditions, climbed nearly 5 points to 140.9, reflecting growing optimism about the current economic landscape. While inflation remains a concern, there's some encouraging news on that front. Consumer concerns about inflation have dropped to their lowest level since March 2020, with average 12-month inflation expectations declining from 5.3% to 4.9%. However, it's worth noting that when asked about their top concerns and hopes for 2025, consumers across all income and age groups consistently identified high prices as their primary worry, with lower prices being their main wish for the coming year. The housing market showed encouraging signs in October, with existing home sales increasing by 2.9% compared to the same time last year. This marks the first year-over-year increase we've seen since July 2021, suggesting a potential turning point in the market. Sales reached 3.96 million homes, up from 3.85 million in October 2023, with improvements seen across most regions of the country. The National Association of Realtors reports that the median existing home price has now risen to $407,200, representing a 4% increase from last year. This is particularly significant as it marks the 16th consecutive month of year-over-year price increases. The inventory situation has also improved slightly, with available homes for sale increasing to 1.37 million, providing about 4.2 months of supply at the current sales pace. Single-family homes led the way with a 4.1% increase in sales compared to last year, while the median time homes spent on the market extended to 29 days, up from 23 days in October 2023. First-time homebuyers made up about 27% of all purchases, and there's some positive news on the mortgage front, with rates showing signs of stabilization after recent highs. In significant trade policy news, former President Trump has announced plans to implement substantial tariffs if he returns to office. He's specifically targeting 3 major trading partners: Mexico, Canada, and China. The proposed plan calls for a 25% tariff on all products coming from Mexico and Canada, and a separate 10% tariff on Chinese imports. These changes could have far-reaching implications for the furniture industry. Currently, China leads furniture imports to the United States with nearly $4.6 billion worth of products this year alone. Mexico follows with $1.4 billion in furniture exports to the U.S., while Canada contributes about $1.1 billion worth of furniture to our market. The proposed tariffs are primarily aimed at addressing concerns about border security and drug trafficking, particularly fentanyl. However, economists and retail groups, including the National Retail Federation, have expressed serious concerns. They warn that such tariffs could lead to increased inflation and reduced consumer spending power. The impact could be particularly significant given that these 3 countries collectively account for more than 1/3 of all U.S. trade, with combined imports and exports valued at nearly $2.5 trillion annually. While some domestic furniture manufacturers view these potential tariffs optimistically, the broader implications for consumer prices and market dynamics remain a significant concern for the industry. Some significant changes could be coming to Sleep Number as the company faces mounting pressure from its largest shareholder. Stadium Capital Management, which owns 11.7% of Sleep Number's shares, is pushing for major changes in the company's leadership and governance structure. This comes at a crucial time as Sleep Number's longtime CEO, Shelley Ibach, recently announced her retirement. Stadium Capital has expressed dissatisfaction with the company's performance and is demanding several specific changes. These include expanding the board of directors, appointing an executive chairman, and implementing an independent CEO search process. The relationship between Stadium Capital and Sleep Number has been tense before. Last year, the shareholder criticized the board's financial planning, which led to the appointment of 2 Stadium Capital recommended directors. Now, they're calling for even more changes, including the retirement of 2 current board members and their replacement with new directors, one being a Stadium Capital principal. Sleep Number has responded by defending its current CEO succession planning process, noting that they've engaged Korn Ferry, an independent search firm, to help find their next leader. The company maintains that they welcome shareholder input but emphasizes that their current changes already align with many of Stadium Capital's previous suggestions. If their requests aren't met, Stadium Capital has indicated they may nominate their own directors at the next annual meeting. Thanks for tuning in to today's episode of Furniture Industry News. To make sure you never miss an update on the latest developments in our industry, from market trends to corporate shakeups, hit subscribe wherever you get your podcasts. Your support helps us continue bringing you the news that matters most to furniture industry professionals. We'll catch you in the next episode with more essential updates from across the furniture world.